At 6:15, I'd like to call the Finance Committee meeting to order. Roll call, Tom Barney.
Here.
Ray Borden is absent, excused, and that means we go with Brian Medved this evening.
Here.
Here. Item 3, agenda revisions and approval.
Motion to approve the agenda. Second.
Motion by Tom, second by Brian. Any discussion? All those in favor, say aye.
Aye.
Aye. That motion carries. Item 4, approved minutes of November 15th, 2021.
Motion to approve minutes from November 15, 2021. Second.
Motion by Tom, second by Brian. I don't see any discussion, so all those in favor, say aye.
Aye.
Aye. That motion carries. Item 5, consent review and discuss November/December vouchers. I know there's at least one question. Brittany.
I received 3 questions regarding the vouchers. The first one that I received was for $39.99 from Web Network Solutions. It's in regards to a domain that we pay that is an annual fee. We do currently have 2 domains. You are correct in the question that you asked. Some of the old domain, the germantownschools.org, is connected to some iPads and some emails, and the answer is yes, we are going to slowly roll those out, and then we will only have the 1 domain. So the $39.99 is the annual fee, and then I talked to the technology department, and that will slowly go away, hopefully within the next year.
Thank you.
The second question I received was regarding the Kiel Area School District. It's for the first semester for this school year. It is the school we are using for the virtual school until we can get our school, our charter school up and running next year. The cost was for $84,809.05. The question was regarding if those students open enrolled out, how much we would have spent first sending those children to the Kiel. So it is a little over $8,000 per student per year. So dividing that in half, because it's only a semester, what we paid the Kiel School District. So we saved or didn't expense about $33,500 by keeping those students here instead of them open enrolling out to another district. And then the other question, the final question I had was regarding, I think there was a little typo in the description. So the question was regarding a reimbursement to a teacher at the middle school, an art teacher at the middle school. She attends a conference every year, and at that conference she can get wool products, not wood products. We had a typo in there. Wool products for a cheaper rate than if she would go to a store. So every year she purchases her wool products for the art classes at the middle school at this conference. So it was a reimbursement to the teacher, and the vendor was Esther's Place, and she said in her description that it's hard to find wool products. So it's not Esther's Place, hard to find wool products. They're 2 separate things. So that was our error, and we corrected it. But those are the only 3 questions that I had, unless there's additional ones.
Right. Yeah, I was wondering. I mean, the internet search brought up wool, and I figured that it wasn't wood products, but just checking. Mm-hmm. Okay.
I'll make a motion to consent to payment vouchers as presented and reviewed. Second.
Okay, motion by Tom, second by Brian. Any discussion? None? All those in favor, say aye.
Aye.
Aye. That motion carries. Okay, next item is reports and updates, and we've got our 2020-2021 financial audit. Wendy Unger, please step forward. Thank you. Yeah, you can adjust that any way you need
I
it.
have to bring that down a little bit. Can you hear me?
Yes.
Wonderful. Well, thank you for having me here this evening. Again, my name is Wendy Unger. I am the partner responsible for the school district's audit engagement. You should have been provided prior to this evening a copy of the financial statements, a copy of the reporting and insights, and then the presentation that is currently up on the screen. I will use the presentation that's presented in front of you to go through both of those documents at a relatively high level. Please feel free to ask any questions that you have. I'll do my best to answer those as we progress through the report. The agenda on the next page shows we're going to briefly talk about the audit results. I'll go through some very high-level summary financial information. I've included a couple additional points that I believe is of interest to the board, or to the board and the committee, and then again, I will open it up for any questions at the completion. The results of the audit, the first slide presented is first talking about the audit objective. The objective of the audit was to render an opinion on the financial statements for the district. We've done that. We've included within the audited financial statements a clean, unmodified opinion. That's the highest level of assurance that you can obtain from us as your auditors. What that opinion means is that the information contained within your audited statements is believed to be materially accurate. All disclosures that are required under the auditing standards have been included within the footnotes of the financial statements, and that generally accepted accounting principles have been adhered to. For FY21, there was a new governmental accounting standard, or GASB, as we refer to them, GASB 84, and that we spoke about this last year, and that changed how the accounting for funds that used to be student activity accounts, so cheerleading and your various clubs and activities, it required an analysis of that activity and a reclassification of those activities to either your general fund, or in the case of the district, most of those went to your gift fund or trust fund, your Fund 21. So that standard no longer allowed those to be presented as student activity funds unless they were exclusively administered by students. And upon evaluation, it was determined that those were better classified into one of those funds I mentioned previously. So there is included in the audit opinion an emphasis of matters paragraph that refers to that new standard being implemented. Switching gears a little bit, on the next slide, I've included a very high-level summary of the general fund activity for the district for FY21. I presented the actual results compared to a budget with a variance column. As noted on this slide, you'll note that the actual revenues compared to budget came in about $8,000 under budget. So very close to actual budget, and actual very close to each other for FY21. Your federal and state grants came in over budget. Some of your local revenues, as we refer to them, student fees and that type of activity, came in under budget. So ultimately a net result of an $8,000 variance. As you can see in the next row, your expenditures significantly under budget. Very positive scenario, $2.2 million of actual less than budget. Several reasons for that. For FY21, the amount of money that you budgeted to be transferred to your special education fund came in roughly $660,000 less than what you had anticipated needing. In addition to that, $1.6 million of additional expenses coming through from pupil transportation, building operations, your instructional staff services categories, all of those came in and contributed to the remaining $1.6 million. So overall, when the district put together their FY21 budget, you budgeted to use fund balance of roughly $1.6 million. For FY21, you actually added to fund balance $666,000, so a positive swing of $2.2 million. Again, a very favorable result within your general fund for FY21. When you add that $666,000 to your beginning of the year fund balance, you have $5.4 million of general fund balance as of the end of the year. That fund balance is broken into three pieces. There's $101,000 that's non-spendable. Those are items such as inventory and prepaid, so items that you have paid for, but you haven't recognized the expense. So those monies get set aside because it's not cash you have on hand. $454,000 is committed. Those are monies that are set aside for debt service requirements, and then the remaining balance, $4.89 million, is unassigned. That represents 10% of the general fund operating budget. So again, a very positive end result for your general fund. The slide that is currently up on the screen, these are the remaining funds of the district. Your special education fund, $8.8 million of revenue. 5 million of that comes from your general fund. Your general fund funds a good portion of that. The remaining portion is funded by federal and state money. That fund had 8.3 million of expenditures, 0 fund balance. It is not allowed to have fund balance, and therefore the 0 fund balance is appropriate. Your next 2 columns are your debt service funds. One's your non-referendum and your other the referendum. $2.7 million of revenue in your non-referendum fund. 1.9 million of that is monies that comes out of your general fund, and a little bit came out of your capital project fund for FY21, and those monies help pay the principal and interest on non-referendum debt. You utilized a little bit of fund balance and had 206,000 as of the end of the year. Your referendum fund had a 6.4 million, almost 6.5 million of revenue. That's all tax levy. You pay your principal and interest of 5.7 million, added 783 to fund balance and had 1.5 million. All of that money is restricted. It can only be used for debt service purposes until debt is paid in full for the district. The next column is your capital project fund. Spent the remaining balance in there. 214,000 of that 298 was various capital costs. 83,000 was a transfer into the debt service fund that I mentioned previously. That fund had 0 fund balance as of the end of the year. The very last column that's presented here is titled non-major. That's purely a terminology that's based on a GASB standard. That is the remaining fund, so that's your food service fund, your trust fund, and your community service fund. Those funds in total added 557,000 to fund balance, had $1 million of fund balance as of the end of the year, and you can see the various components of that fund balance down below. The one item I will note, all of these saw a positive increase in fund balance for the year. The largest was that trust fund, which again is the Fund 21. That went up 425,000, and that is due to the movement of those student activity funds that I mentioned was the new standard that went into that fund for spending in the current year. On the next slide, a couple other points that I've included here. Your capacity and ability to borrow. The district can borrow a percentage of its equalized value. That percentage is that figure is 392 million as of June 30th. You had 89 million of general obligation debt outstanding at that point in time, so therefore your capacity to borrow is an additional 303 million. Just like to draw your attention to that, and that is disclosed within the footnotes of the long-term obligations. The next 2 items talk about your OPEB liability and your employee retirement system. These are obligations or assets that are recorded based on actuarial data. The total OPEB liability is done by an actuary that the district hires. The employee's retirement system is an actuary that WRS utilizes to prepare that data. Your total OPEB liability was 15 million as of June 30th. That went up 2.7 million over the prior year. Your employee retirement system, that was an asset as of the end of the year, and that was 10.5 million as of June 30th. Keep in mind that asset from WRS is an asset only because the investments of the plan as of June 30th exceeded the obligations, and that figure swings from an asset to a liability on an annual basis based on investment and the market volatility at that point in time. Both of those items are included in your footnotes, and both have extensive detail included there also. Last item on this page, the federal and state compliance audit. Because the district expends over $750,000 of federal funds, in fact you expend roughly $2.3 million, you are required to have a federal compliance audit or an audit in compliance with the uniform guidance. You are also, because we live in Wisconsin, required to have a state compliance audit because you receive roughly $15 million in state monies. So looking at the various programs, we cycle test programs based on their dollar values. For 2021, on the federal side, we looked at your special education cluster program, we looked at your school nutrition program, and we also looked at Medicaid. On the state side, we are always required to look at your general aid program, and that is the one that we did during the year. Very happy to say that on both the federal and the state side, There were no compliance findings noted in any of those programs that we tested. So again, another very positive result for the district for FY21. The last slide that I've included here, this is a very high-level summary of the communication document, the reporting and insights document. We utilize that to communicate comments and recommendations that may come up as part of the audit process. We also have to have some standard and customary communication with those charged with governance. Included in there is a deficiency noted regarding the internal control environment. 2 points included in there. One relates to obtaining W-9s to support new vendors that are added to the system. You are obtaining those, but not necessarily before those vendors are entered into the system and paid. So there's just a timing issue. So just encouraging the W-9 to be received before those vendors are paid. The other one is regarding general ledger accounts for new hires and making sure there's a review and approval of those. Again, that review is being done, but there was not documentation available to support that. So we just are noting that management should keep some type of documentation of that review. Also included in that report, 2 items. One is regarding testing backups of your financial data periodically. That is not currently being done, and encourage you to consider doing that. And then the last one relates to entering budgets into Wise Grants. Wise Grants is your system for where you claim your money from DPI. And in that system are budgets that are approved by DPI, and just the timing of when those budgets are being entered and provided to finance is a little bit lagged. So just a reminder to get that information in and supplied to finance so that they have those for budgetary purposes and for the beginning of the school year accounting. Lastly, again, there's a section in there, the required communication section. Those are all items that we as your auditors need to communicate with you. Nothing I need to draw your attention to, and they're very standard and customary, but it talks about accounting principles, so it highlights the new GASB, talks about estimates that are included within the district statements, again, depreciation, OPEBs, WRS liabilities, and assets. Talks about whether or not there were any journal entries done, talks about whether or not we had any difficulties or disagreements, and we're very happy to say we get great cooperation from the district, so nothing that is noted in there. So again, overall, very a positive result. The very last page of the presentation is my email address and direct line. I go through this very quickly and at a very high level. Happy to talk with any of you in more detail, but at this point, I'd also be happy to answer any questions you might have now.
Bob?
Wendy, pleasure to see you and happy holidays.
Great to see you. Happy holidays.
Again, thank you for this excellent presentation, and it just reaffirms that the district, the board, and everyone else involved in the finances are going down the right path, so thank you so much.
Definitely.
Do have a question relative to OPEB, and I always don't pronounce that the right way, but OPEB, 15 million, up 2.7 from last year. I did see, I briefly perused the 50-plus page audit report that was attached to our packet, and I'll do a deep dive on that this evening. But does that report contain the reasons for the 2.7 increase?
It does at a very high level. So included in the footnote, it will show the beginning balance, and then it shows the reasons for the increase. So some of it's interest, some of it is changes in assumptions. There was a change in the discount rate during the year in the actuarial study, so that inflates or brings the total liability up. So you can see by rows, but if you go to the actual actuarial study, it provides even more detail.
This board, over the last year and a half, has been very aggressive in terms of identifying opportunities from a reduction in spend, increasing our fund balance, et cetera. You know, one of the things that we didn't look at, which I think I would recommend that in the near future we look at this from an expense standpoint, because I think it's an opportunity. When Act 10 came along, we went south. We were, I think, 2.7 million favorable, the reduction. But now we're trending up again, so I think that's an opportunity for the board to identify all the costs that go into that bucket and what we can do to reverse that and drive it down. So, but again, I want to thank you for all you do, And again, it just reaffirms that the district is in the right path financially, so thank you.
You're welcome.
And Bob, just to be clear, you're talking about OPEB?
Yes.
I believe, right, yeah.
Yes.
And Brittany and I have talked about that in the past. I don't think we've really started on it yet, but Brittany had plenty to do as a new business manager in the district, so we're just not quite there yet, but I don't know, maybe in the next year we can do it. Wendy, thanks for the report. I'm just curious, I did not receive a letter from Baker Tilly asking if I had any conflict of interest in the district or if I knew of any financial issues. Did any letters go out to any board members this year? No?
No, that is not a practice we typically do. That was something that Rick preferred, that we do that solicitation, but that is not something we typically do with our board members. We do ask management. We go through what's referred to as a related party list. We highlight the board members, and then whether or not they have financial interest in their employers, and then whether or not the district does business with them if they do have an interest. And we are very comfortable with just getting that. Rick always wanted us to get the conflict statements, but we don't do that typically.
Okay, so that's not a Brittany thing, that's a Rick thing.
It
Okay.
was, yes.
Yes, Bob?
Yeah, I think, I'm speculating when I say this, but I was in a different role back then when Rick was here. I was a board president, and it was full knowledge that my employer was Johnson Controls, and we had work product in the buildings here, and I think from a spirit of transparency, Rick just wanted to get that out there, and every year I would fill that in, just to get it out there from a spirit of transparency, so.
Yeah, and just for transparency, we've been replacing all of those Johnson Controls, you know, because we're having a tough time getting service on them.
I don't work there anymore.
All right, I don't have anything else. No further questions? I'm getting a lot of no's, so thank you.
All right, happy holidays.
Yeah, thanks for coming tonight. Okay. Let's see, where are we? Okay. Item 6B, November variance report. Brittany?
In front of you tonight is the first variance report for the 2021-22 school year. In October, we set the levy and finalized the budget. So this would be the first, again, report that is coming to committee. A few things that I wanted to go over before I start with the report is to know that in previous years we did the transfer from Fund 10 or our general fund to Fund 38, which is our non-referendum debt, and we were using fund balance. Starting this year, we are not doing that. We are levying into Fund 38, so the transfer from Fund 10 to Fund 38 does not exist. So that's one of the reductions of the cost that you see in your two in the expenditures. The other one, at the annual meeting, the board approved a balanced budget. If you look at this variance report, the budget is not balanced. And the reason for that is the retro that the board approved for last year that was actually expensed this year is built into the budget. So I will come to the board and ask for an adjustment. It was approved by the board, so there shouldn't be an issue. But that is the difference on what you saw at the annual meeting versus what is actually in front of you today. So that's about $411,000 we are using of fund balance. So the $666,000 that Wendy referenced, 250 of it is still going to be increasing our fund balance, which is one of the future goals that the board has. So that's the difference between the two. One of the other items that is not included in here, which I will be talking about later on this evening, is our ESSER 2 and our ESSER 3 dollars in the revenue side or the expenditure side. So once those are finalized numbers, we will add those to the budget. And again, the board or the committee will approve the budget change. So right now in the revenue side and the expense, ESSER dollars are not included. So those will come as a change. And then finally, the operating fund balance. In one of the items, you see that we have a deficit in our fund balance, and again, it's a snapshot picture of that exact day and time. When we do receive our property taxes in January, we will be paying off the short-term borrow that we borrowed. I believe it was a few months ago. But we will pay that off, and then we will have money to get us through the rest of the year until approximately June, but we'll do another evaluation at that time. So if you look at the report, the variance report, we are spending approximately at the same level as we did last year, even though our budgets have decreased. We are spending the same percentage-wise, which is good. We shouldn't be spending more money than we did in previous years or less money than the previous years. And the same on the revenue side. Revenue is set, so we are going to continue to spend or to receive at the same level. If you had additional questions on the variance report, I'll be happy to answer any questions that you have.
Just so we have it straight on the fund balance, Wendy mentioned 660K, and that number is actually, is it reduced by 250?
It's reduced to about 250, so we used about 410,000 and some change for the retro for last year that we paid out this year. So even though the fund balance for the end of last year is not going to change, that's still gonna say 660,000 approximately. It's that we're going to use fund balance possibly at the end of this year about the $411,000.
Okay,
So the plan is still to come out as a positive, adding to our fund balance of $250,000.
right, okay, thank you. No questions from anybody else? Okay, I think we can head on to item 6C. Or,
Yep.
well, did we cover? Okay, yeah, we got B taken care of. Okay, C.
So two of the items that I wanted to bring to the Finance Committee, I'm calling our celebrations, are one of them is that the tax bills were sent out from our municipalities. We have to send them out to our municipalities by the beginning of November, and then they usually send them out by the beginning of December to all the residents. The residents should have seen a decrease in their property tax bill from the school side portion of their bills. Our mill rate did decrease. This year it was $9.11. In previous year it was about $9.89. So unless there was a project done to a person's home or something that would have increased their values, everybody's property taxes should have decreased. Two reasons. One is we have an increase in state aid. And then another one is that our overall property values as a district, which is private and businesses, increased this year in all our municipalities, which would then bring the overall mill rate down. With the mill rate decreasing, or the property, the levy decreasing, we were allowed to restructure our referendum debt, which the board approved, and still reduce our levy. So we were able to pay off more debt, restructure our debt, and still ask the property taxpayers for less money. And then with the restructure, as you know, we are going to increase our state aid in the future, which will in turn continue to bring down property taxes. So that's one of the celebrations that I have, and I can answer questions to that one if you have any questions.
I think just maybe kind of a statement. The checking I did with some friends and a couple of board members, the number for Germantown anyway was negative 2.6%. And it seemed to be fairly consistent across the board. So I think it's a little unknown if that occurred in Richfield and other areas, but maybe it was the same. So that was kind of nice. And the other part of it is and I'm not exaggerating here, I took a real beating on the taxes going up last year. Personally, phone calls, emails, and especially people at work, because they know who I am and they also live in Germantown. And it wasn't that fun, but I have thick skin, as everybody knows. So this year I would like to thank everyone who has been calling me and emailing me, and I'm sure the rest of the board has gotten as many emails as I have for the 2.6% reduction in taxes. So I'll just say you're welcome to everybody that's sent me all the well wishes and so on and so forth on our tax reduction. So thank you. I also want to thank, by the way, teachers, principals, and the district staff, because we did make cuts, a lot of cuts last year, and the numbers, of course, you were instrumental in that, Brittany. I don't want to take credit for it, but, you know, everybody else in the district should get credit for that also, bringing taxes down, and I think hopefully allowing you and I and the rest of the board to sleep a little bit better at night, you know, for our financials being in a little better shape than they were the year before. So thank you for that.
The other item that I wanted to bring to the committee or the board's attention is the district's Moody rating. The Moody's rating allows districts to, when we go out for a financial borrow or a refinance, it's basically our rate that people will invest into us or borrow us money. When we did our refinance with the referendum, we had to go through this is one of the steps that we had to go through to get people to borrow us money. And the process is we are interviewed, we explain where our finances are, where our plan is with our finances, and we were able to stay at a AA3 rating, knowing that the plan to increase our fund balance is one of the factors there. So I think that's a celebration. We could have reduced, and if we do reduce, we pay higher interest rates or less people would borrow us money. So staying at a AA3 is a positive thing. So I wanted to bring that to the committee as well.
So I punched that into a search engine, Moody's AA3, and it comes up with, there's another organization out there too, and I didn't write the name down, but it's kind of alongside of Moody's. Mm-hmm. And the other organization would put us at a AA minus. And I think the important thing that maybe citizens should know is it looked to me, I also didn't write this down, but it looked to me like from where we sit on that chart, there are 6 steps down we could fall, and I think there's 4 steps up we could climb. So there's 4 positions better than AA3, and there are 6 steps worse, you know, that have some B boys in them down below. So of course we don't intend on taking a step down. I think in the near future we'll take a step up if we're lucky and do the right things here. So I think everybody's probably interested in that. You know, it's basic language, right? We have a little ways we could go up, but there's a lot of ways we could go down yet. So I think we're doing pretty good.
I agree.
Bob.
Yeah, Brittany, I just want to thank you as well. This reaffirms that we're continuing to go down the right path. We heard a wonderful audit report from Wendy. Great news on the property taxes. My property taxes went down, so I want to thank everybody. I want to thank everybody for doing the heavy lifting on that, because I know it put a lot of stress on our teachers and our staff. I understand that, but we had to do it. We're going down the right path, and the Moody's just reaffirmed AA3 is, I think, is very good. It's still an investment grade, and it shows that we're definitely going down the right path, and you're spot on. It's a celebration. So thank you for all that. Thank you. Thank you.
Thank you, Bob. Okay, I think if that's it, we can move on. Item 7D, Elementary and Secondary School Emergency Relief, or ESSER update. Thanks for spelling that acronym out.
I'm just going to say ESSER for moving forward.
Right,
Okay,
that's
good.
fine. That's why I said it.
So I just wanted to give a report out on ESSER funds. There's lots of communication on ESSER funds. There's lots of projections on ESSER funds. There's lots of what we can spend, what we can't spend. There's lots of information out there. So this would just be my first initial presentation, and my plan moving forward is to continue to give updates and presentations to the board and the committee, and the community knows where we are at with the planning of ESSER dollars. So this is just a little background of it. So ESSER, I'll just go over the basics. ESSER, as you know, are one-time funds. DPI uses it as ESSER is not an ongoing program to support long-term expenses. That's one area that we have to focus on. These are one-time funds, so we don't want to use it for ongoing expenditures. There's ESSER 1, ESSER 2, and ESSER 3. ESSER 1, all of the ESSER dollars can go back to March 13th, 2020. That's when schools closed for COVID-19. They can all go back to expenses as of March 13th of 2020, and we'll work with our auditors if there are expenses we want to go back to and still claim them. ESSER 1 dollars have to be spent out by the end of 2022, and then there forward, ESSER 2 has to be spent out by 2023, and then ESSER 3 has to be spent out by the end of 2024. So that's part of the planning that we're gonna have to do. You don't wanna spend it all right at the beginning, but you don't wanna wait until the end to spend it, and you have to spend them in the order of the ESSER dollars. Just to give you a little background on the funds that we're receiving. So ESSER 1, we've talked about last year. The district received a little over $75,000. This is a little different than ESSER 2 and ESSER 3 because the private schools got a portion of those dollars. So the district actually received a little, like $70,500, and the private schools received about $5,000. That's the only ESSER funding that we had to split with the private schools. It's based on Title I formula. So districts that have high Title I dollars or more low-income families received more money from ESSER 1, and districts that have less income, low-income families received less dollars. Once it came to ESSER 2, there's two parts of ESSER 2. There's Part A, that is again based on the Title I formula, but DPI, or the federal government, and then DPI decided to break out, so the private schools got their own money. We don't have to manage it. So ESSER 1, we manage their money. ESSER 2, we don't manage. They're managing their own money. So of that, we have gotten our allocation of $295,382 for ESSER 2 Part A. We have also been guaranteed so far ESSER 2 Part B of $689,000 approximately, and that is based on our in-person instructional hours last school year. So all school districts had to submit their in-person instructional hours, and then it was based on that. We were estimated to get more money than that, just on DPI's estimate of where they thought school districts are gonna submit their hours, and it turns out that other school districts submitted more hours than DPI thought, so ours went down. Not to say that we didn't have our children in as much as possible, we did, but it's also other districts reported higher than what was projected. So we got $689,000 of those dollars. ESSER 3 Part A.
Let me stop you there real quick. So have we received the ESSER 2 Part B yet, or are we still waiting to receive that money?
Nope, we are guaranteed that it is in DPI WISE grants.
Okay.
So we have received it. We have not spent it, but we have received it. We haven't received it in our bank account, but it's there and available and guaranteed to us.
All right, thank you.
Same with ESSER 3 Part A. We have been given it, it's guaranteed to us, it's in our WISE grants. We have not spent it. And that's the $664,000, and again, based on the in-person instruction hours. The only part we don't know is ESSER 3 Part B. Those are unknown because they're having some disagreements at the federal level that they're still working out. But I do know that ESSER 3 Part A is 90% of ESSER 3. So there's still 10% that they're discussing back and forth. So you're going to assume that Part B is going to be a smaller portion than Part A. So we know that we're getting about 5 parts of it right now, and the 6th part is unknown. Just to go through, these are going to be repetitive. So ESSER 1 is, again, based on Title I. There isn't an application that's required. Once we get the money into the state, we have to say what we're going to use the money for. So there is an application, but it's not an application you have to fill out to actually get the funds. You have to spend them on certain areas, in which we did spend the $70,000 on, as Mr. Nowak and I reported to the board throughout last year when we were showing the COVID-19 expenditures. They have to be spent on addressing long-term closures, education and technology, mental health, and as you'll see moving forward, all of them have to be spent on these items plus additional items. ESSER 2, again, you can spend any of the money on the items I just listed on ESSER 1, but then you also have to spend ESSER $2 on mitigating learning loss, restore and maintain high-quality learning environments, and again, safely opening elementaries and secondary schools as soon as possible, or continue to keep them open. And then again, ESSER 3, you can do the same things for ESSER 1 and ESSER 2, but ESSER 3 has different things added onto it. It has addressed learning loss through evidence-based interventions that impact academic, social, and emotional needs. So that's an additional part that is required onto ESSER 3. 20% of the funds of ESSER 3 have to be on evidence-based intervention strategies, and then 80% of the funds have to be, again, safely opening schools or keeping our schools open. So previously, when we reported to the board back in June, we've spent about $470,000 in ESSER dollars so far. We've claimed $181,000 of that. We have not claimed the whole $470,000 because we have to work with our auditors on moving back. The financial statements aren't going to change. We just have to work with them to make sure that we're putting the money in the right areas. So as you know, we spent the $71,000 of ESSER dollars last year on mitigation supplies, unemployment, transportation. There was a list of, and technology as well for our distant learning. And then ESSER 2, we started, the board approved 2 limited term contracts for, I believe it was kindergarten and first grade, for 1-year contracts for last year. So we did claim the $110,000 for those 2 teachers to help teach virtual programs last year. And again, the remaining $289,000 we will claim. And then if you look, we are so far have used ESSER 1, ESSER 2 Part A, and Part B. What's the plan moving forward? ESSER 3 has some more information or information that we have to give to the state. So far we have had to create or answer questions to the state regarding our safety plan. That's the safety recommendations, accessibility, and continuity of service. We had to answer those questions. So it's like, do you have a policy around mask wearing? Do you have a procedure around mask wearing? So you have to go through those. And none of these questions are going to pull our money from us, but the state has to report to the federal government because that's who gave the state the money. They have to report these answers to the federal government. And then the other item that we're still working on, which should be done by the end of this week, we are doing a review of our safe return to in-person instruction and continuity of service plan. There's a plan that has to be submitted to DPI, and as that plan changes, it's a constantly moving change depending on what our school district is doing. We have to continue to update that plan. It has to be reviewed every 6 months no matter what, and a new plan has to be submitted. Even if the plan hasn't changed, it has to be submitted to the state, and that has to be done through, I believe, March of 2023. We have to do it every 6 months. One of the items that we also have to obtain for ESSER 3 dollars is feedback from all stakeholders. So by the beginning of January, we will have public input at the board meetings, which is one way to get feedback and from community members. And then also we will have a Google form on our website that community members can, or employees, community members, anybody that's one of our stakeholders can give feedback on what we should spend our ESSER 3 dollars on. We will then take all those suggestions and we will plunk them into the categories that the state says we can spend those funds on, and we will present it to the board and a recommendation on how we're going to move forward with our ESSER dollars. We are going to claim our current expenses, and again, we are going to develop a long-term plan that will be approved by the board. Any questions?
I can't think of any. Thank you.
When you're seeking public input, are you going to list out the categories so that the public doesn't just put anything on the form?
Yes.
Okay,
That's going to be part of the website.
got it. Thank you.
Okay, very good. And the last item here is item 6E, Edward, scoreboard plaque.
Yep.
Mr.
Yeah,
Stolzlin.
so, at a previous meeting, the board approved $7,805, alongside another donation for scoreboards for the main gym. And the $7,805, came through as Germantown Hoops organization, but it was actually a private citizen, Dennis Cloth, and his family who donated the money for the new scoreboard in the main gym. Additionally, Mr. Cloth asked if he could put, or if we could put a 7x7-inch plaque underneath the scoreboard stating in loving memory of Kevin Cloth, 1970 to 2021. Dennis is a longtime teacher, coach, event worker, and community supporter in the district, and his son, GHS alum and an avid sports player, while at GHS, was tragically killed in a warehouse shooting last spring. Typically, our policy, if we're naming something, we have a policy that you have to name a scoreboard or to name a field. This is a different category. It's a small plaque that would be up on the wall in that main gym. And we would like to proceed with that, but we wanted to bring it to this committee because this is where it originated from. And if the board would like to put it on a board agenda for a full vote, otherwise we would just move ahead with the plaque.
I would take need a motion? Or no?
I don't really need it, but you can. Why not?
I'll take a motion on it.
Make a motion to move forward with the plaque,
As presented?
as presented.
Okay, motion by Tom. Second by Brian. Any further discussion?
Yeah, Brett and I discussed this a little bit, and we just wanted to make sure that we were clear about what the plaque was about and where the donation actually came from, because we approved it, but we didn't necessarily know the ramifications behind it. And we wanted to make sure that we honored, one of our past students and really appreciate what the family is doing for the district. So I think it's a great thing.
I think it's a great thing as well. I remember the news story now that it's been brought to our attention. I don't think I recall that it was a Germantown student was one of the victims. So my condolences to the entire family for that incident. Okay, any further discussion? Hearing none, all those in favor say aye.
Aye.
That motion carries. Shall we bring it to the board then for,
I don't think we need to.
okay, I don't think we need to. Sounds good. All right, item 7E, I see none. I think that should be an A. Unfinished business. Item 8, new business. There's no monthly purchase request, so nothing there. And item 9, I'll accept the motion.
Move we adjourn.
Second.
Okay, motion by Tom, second by Brian. Any discussion? Hearing none, all those in favor say aye.
Aye.
That motion carries. We are adjourned at 7:03.